I would like to introduce your speaker for today, Kris D. Ms. Kully is a partner in Mayor Brown's Washington, D.C. office and a member of the Consumer Financial Services Group. She advises clients on federal and state regulatory compliance matters affecting providers of consumer financial products and services, including licensing and substantive practice requirements applicable to mortgage and consumer loan lenders, servicers, and investors, as well as other participants in the real estate finance matter and consumer credit industries. She helps clients understand their obligations under all the authorities of the Consumer Financial Protection Bureau, including the Federal Truth in Lending Act, Real Estate Settlement Procedures Act, the Equal Credit Opportunity Act, the Home Mortgage Disclosure Act, Secure and Fair Enforcement for Mortgage Licensing Act, the Consumer Leasing Act, the Gramm-Leach-Bliley Act, and the Fair Debt Collections Practices Act, as well as similar state laws. She advises clients in connection with originating, purchasing, and servicing all types of consumer finance products, including residential mortgage loans, consumer loans, credit cards, lease agreements, and deposits. She also participates in regulatory compliance due diligence activities. She is a frequent speaker and writer on cutting-edge consumer financial protection issues. Ms. Kully, welcome to the program. We are now ready to begin.
Thank you very much, and I appreciate all of you joining me this afternoon. As the moderator mentioned, I'm Kris Kully with Mayor Brown in Washington, D.C. And since the regulations on mortgage loan originator compensation first became effective in April 2011, I've been, like perhaps many of you, poring over every word that the agency issued on the subject. First, of course, it was the Federal Reserve Board, and then later the Consumer Financial Protection Bureau. Everything they've said that I could get my hands on, I've been listening to companies who are trying to understand how to make it work. And while the requirements and the restrictions of the rule, which is in Regulation Z under the Truth in Lending Act, while the rule hasn't really changed, at least not in a few years, times have changed, companies change, circumstances change, and that presents the need to dig in a little bit further and remind ourselves of what the rule says, to reexamine its requirements and look closely to see what it says and doesn't say, and then try to decide what's best for you and for the loan originators of your company. So first, today we'll go quickly through some of the basics of the rule. I know many of you have likely heard some of these basics before from your compliance team, or perhaps you are the compliance team and you've said these words before. But it's helpful as a framework for trying to analyze compensation proposals that you'll be presented with in your companies. Then I'll go into some of the latest questions I've heard, some of the case studies I've examined with clients and colleagues. And then after that, we'll go into a bit more of a context of what the regulators are focusing on and what else is out there.